Hi there, welcome to Kneppy Invest and welcome to another daily update. Wasn't actually going to do another daily update today because, to be honest with you, we're in June now and June can be quite a bit boring, particularly compared to May or compared to, say, April, February, August, and July. And it's good that June can be boring or slow because when we get into July, we start being a little bit more busy. More companies are releasing their quarterly reports. And then we get into reporting season in August, my favorite time of the month. In fact, it is my favorite month when it comes to investing because we see a lot of full-year results released in August, some half-year results. Not all companies release their results in August and February because some companies release their results in May, as we have seen in the last few weeks. But July and August, particularly towards the end of July into most of August, can be busy. And I love that time of year. But personally, June is the best month of the year. And the reason I say that should be quite obvious because I was born in June. Won't say exactly which day. Now, because June can be quite boring, I was thinking of maybe not doing a video today, a daily update, but there were a few interesting announcements released over the past few days. So I thought I should touch upon those few interesting announcements. I won't look at all, but I will touch upon some of them. Now, this is the XGO right now, and as I've already discussed, there's nothing really happening right now in the Australian market. The XGO, XAO, all going sideways. So if anyone says we're in a new bull market right now, they're wrong. We are not in a bull market. The only reason they're saying that is because of the NASDAQ. And the NASDAQ is only being lifted by a few companies. This is a really nice looking chart, by the way. And it's really AI that is fueling this hype in NASDAQ right now, particularly with companies like NVIDIA. And there's not many companies like NVIDIA or who have AI on the ASX, apart from Appen. And I might show you the Appen chart. I'll just write that down so I don't forget. Because Appen has been going nuts. And I think that has been fueled. That hype in Appen right now is being fueled by AI. So possibly, and I've heard some people say that, we are right now in an AI bubble, but then you get Bill Gates saying AI could be bigger than the internet back 20, 30 years ago. And I think he might be right, to be honest with you. So let's go back to yesterday. And I've already got it open up on yesterday, which is handy. Now, the first interesting announcement, I've got to refer to all preliminary fund reports or full year results, half year results as interesting. And TTA Holdings, a very small cap company on the ASX, did release their final report. I had a very quick look at this. It did not excite me. A revenue of about $1 million. This is a small cap, very small cap company. In fact, probably a market cap of like $2 million. Revenue is not increasing. In fact, actually, if you have, just open up TTA Holdings. The first buy bid is at 0.2 cents. The first sell bid is 1.5 cents. So a massive spread between the buy and sell, whatever you want to call them, which means there's not much history when it comes to trading. In fact, the last time shares were traded in this company was the 28th of April. So over 1 month ago. So this is the whole reason I would not invest in this company, is because it's highly liquid. Not only is it highly liquid, this company is not growing. In fact, revenue went down 60% on last year. So I have no interest in this company. But even though I have no interest, I still had to have a look to see how they did perform in the past year. Not very good. Next interesting announcement. Well, interesting is it's a, what's the word? Subjective word. Tiny Beans appointed a new CEO. An interesting name. And the market absolutely loved this announcement. Share price up 50% yesterday. Up another 21.7% today. When you have a look at this announcement and the person involved, like I've never really heard of this person, Sophie Patterson. Sophie spelled Z-S-O-F-I. Yes, probably one of those parents. And her history was interesting. She most recently was a CEO of Loop, a portfolio of digital health and wellness subscription products, including Centre by Chris Hemsworth. Yes, Thor. So maybe that's why the market got excited about this appointment, because she has an association with Thor. That's a ridiculous suggestion, but who knows? But the market liked that appointment of this CEO. Share price up something like 70, 80% in the last 2 days. Another interesting announcement, well, not interesting announcement, but A company called Acusensus, ticker ACE, potentially in the future, will become the most hated company on the ASX because the services and products they provide are to governments to check people who are on mobile phones, that sort of thing. Yes, those mobile phone cameras, most of them are supplied by Acusensus. They listed on the ASX about 4 months ago, and they've been doing okay. And they announced their first enforcement contract awarded in the United States. I think that was in North Carolina. So even other countries are getting into checking whether people are using their mobile phones while driving. And I don't discourage that. I don't think people should be on their phones when they're driving. But I also don't believe people should be eating when they're driving, that sort of thing. On occasion, I do that. So Acusensus, if you do like that sort of thing, a company, I think the market cap about $85 million. I think they will have fairly good growth over the next few years. Have a look at that company. But because they've only been listed for 4 months, I haven't done any research on the company just yet. I'm just going to wait, keep on waiting. Now, the only really interesting announcement released yesterday was from a company called Lynch Group. Now, the reason this company is interesting because they provide sell flowers. I was going to say manufacture, but manufacturing flowers is not a thing. Grow and sell, distribute flowers. Probably the only type of company like that on the ASX. And they released a trading update yesterday. And I'm very happy to announce, for those who don't know, and for those who don't know me, the sort of announcements I'm looking for every single day are trading updates, particularly profit upgrades. And this was a classic profit upgrade, not profit in the correct terms, because this was EBITDA. But when they do, a company does upgrade the EBITDA, I just, assume that it's profit as well. So they've increased their EBITDA forecast for financial year 23 from between 36 and 40 million up to 42 to 43 million. And things are going pretty well for the company right now. And that's counter to what the market's been thinking. So let's have a look at the chart for it's not LBL, LGL. LBL is laser bond. So the share price of this company has been dropping, but so this company has been around for a little bit since 2021. See, this is Trading View. So if you look at this chart for Lynch Group, it goes all the way back to 2010. There was a big drop. So big, no trading between 2010 and 2021. So 2010 and before that, there was a company with a ticker code LGL, and that company went bye-bye for some reason. And for some reason, I don't know why, Trading View can't distinguish between the two companies. But when this company did list on the ASX, the share price got as high, Lynch Group got as high as about $3.90 back in August 2021, and share price has been falling. However, it looks like the market has got this wrong. Possible breakout in the share price. Share price up 16.1% yesterday on the back of this profit upgrade, and this is exactly what I'm looking for. My only concern with Lynch Group moving forward is just a lot of supply that will be out there because of all the shareholders who bought at higher prices in the past. Not all liquidity either, but way more than TTA Holdings. But that would not dissuade me from taking a position in this company if I liked where this company was moving. Lynch Group at this point in time, let's have a look. What was it, LGL? A market cap maybe 250 million, I'm guessing, 275 million. And I think because this company is profitable, it looks like they are growing now, I think this is a company that needs a little bit more research. So I'm going to do a little bit of research on this company. Also did a little bit of research on flowers. Is flowers a good sort of sector to be in? I have no idea. Anyway, to be honest with you, that was probably the most interesting announcement released on Thursday, the 1st of June. Now, just above that announcement, there was another one released by Audio Pixel, demonstration of Gen 1 speaker from AGM presentation. And this was a request from shareholders or something, if I remember correctly. Many shareholders attending the meeting requested that a copy of the technical presentation and demonstration of the Gen 1 chip playing by the Chief Technology Officer, Yuval Cohen, be made available on the company website. So that was an interesting announcement. And the reason that's interesting is because of what's happening with the share price of that company over the past few days. Not today, on the 1st of June, but what happened, they had an AGM, I forget which day it was, on the 30th of May. And then on the 30th of May, the share price increased 34%. And then on the 31st of May, the share price increased another 20%. And I was thinking something must have happened at the AGM. So maybe it was just this demonstration. That's why the shareholders wanted this demonstration to be available on their website. So I have no interest in this company. However, if you do look at the chart, and the reason I have no interest is because they have no revenue. So it's just a story at this point in time. But if you do look at the chart, share price has been in a downtrend, which is understandable. This company's burning through cash, is not profitable, not generating any revenue. But this is the sort of breakout I'm always looking for. But again, because the share price has been dropping, there's still going to be a lot of supply there. But that supply has been met by demand over the last few days. We haven't seen a precipitous drop in share price after those two big up days. And that's actually fairly a good sign moving forward for Audio Pixels. But again, I don't have much interest in this company right now. And because it's mostly my ignorance around their technology. I'll be honest with you, I'm ignorant on their technology. And is that it? And then, so then we see a lot of, here it is, product disclosure statements released. And for some reason, ComSec just repeats it over and over. These aren't a lot of product disclosure statements. It's just repeated. So rinse and repeat, doubling down, tripling down, quadrupling down. That's why there's so many of them. And probably the only other announcement I want to mention that was released yesterday was a company called Orcoda, works contract with Horizon. This company has been doing really well in terms of chart recently. And also the company has been operating cash flow positive. So again, when a company can show they are operating cash flow positive and profitable, you will see the market become interested in that company. And look at this chart for Orcoda. Share price was down as low as about 4 cents back in October 2022. Share price low then was actually 5.4 cents. Share price now is around about 30 cents, say 27 to 30 cents. So that is because of what this company is doing financially. And they have released a couple of announcements in the last 2 days, price sensitive announcements in the last few days. And they released another one today on Friday, which I might get to in a second or so. So interesting happenings at Orcoda, ticker code ODA, market cap about 46 million. So really hasn't gone up all that much in terms of valuation. But I think that's it yesterday. So let's go to the announcements today. Oh, the other thing was TTA Holdings was suspended from trading because they did release should be set here somewhere. Actually, I'll just click on the company. So they released their final report at 8:17 a.m. and then they were suspended from trading at 9:18 a.m. because they didn't release their financial results early enough. Only 2 companies that happened to, if the report, for not lodging the relevant periodic report by the due date. So a little bit naughty. They did release it early enough. They were being a little bit, what's that word? Procrastinating, whatever. And they were suspended from trading for 1 day. But it doesn't really matter because no one buys or sells their shares anyway. Anyway, let's have a look at the announcements today. Only 48 announcements, price-sensitive announcements. Always have to correct myself then. And there were a few interesting announcements, maybe 1 or 2, maybe 3. And the first one was, and probably the most interesting announcement of the last 2 days, was Adairs released a trading update. And as soon as I saw them releasing trading update, I thought it was going to be negative, and it was negative. So they've mentioned here, the impact of rising interest rates and higher cost of living have created a more subdued trading environment since April, with lower traffic observed both in stores and online. And this was also a profit downgrade. So sales downgraded from above 625 million to now lower than 622 million. Group EBIT downgraded from between 70 to 80 million to 62 to 65 million, and capital expenditure about the same. So this is a very definition of a profit downgrade, and the share price would have dropped quite substantially. So I haven't had a look to see how much it dropped. I would say 20% or so. So let's have a look. Adairs. Actually, we can have a look at a chart here. So Adairs has dropped 14.6%. Not as bad. There was a little bit of buying today. And we know there's buying because the shadow on the downside of the candlestick, there was a nice shadow there. So share price got as low as $1.50. So it's not much of a shadow. Interesting thing is I did put in the lows, the June lows of last year in. So the share price has fallen through those June's lows. So that means the share price now is at a long-term low or high, low. And the last time the share price was this low was as the share price was recovering out of COVID-19. So fairly negative when it comes to Adairs. And again, the valuation of this company is probably about 300 million, 278.6 million. This is up to date after this drop in share price. So share price has been as high as almost $3. So share price, in fact, let's have a look to see how high the share price got in the past. So share price as high as $5, just insane, in April 2021. So the share price has decreased 66% from its highs. So even though there's a lot of negative sentiment within the consumer discretionary area, I think there is an argument that some of the valuations of these companies are getting to the point where they are looking attractive. I'm not sure whether Adairs is there just yet. I don't know this company all that well. I've been into one of the stores once because I was researching the company. I just wanted to see how much clientele they were getting, and I was a little bit disappointed in that one store, but that was just a one-off. And I just comparing them to, say, JB Hi-Fi, also comparing them to Shaver Shop, those sort of things. And that could have been I just went there at the wrong time. But anyway, share price down a lot since those highs in 2021. So that was probably the most interesting announcement today. And actually, in fact, that's probably why I did the video, because of Adairs. But there were a couple of other interesting announcements. FSA Group, I'm pretty sure this is going to be negative as well. Didn't have a look at this. I had a very quick look, but not a substantial look. So financial year 23 guidance, so they have put some guidance here. They expect their earnings down 15 to 20% compared to financial year 22, and expect a full year dividend to be 7 to 8 cents per share, which is probably lower than last year. So let's have a look to see how the market reacted. Now, the share price of this company has been, I still remember researching this company about 8 years ago, and I'm pretty sure the share price has done nothing in 8 years. So the market hasn't really, only down 4.9% or 5%. So the market sort of expected this. But if we look at the weekly chart here, yeah, so I would have been researching this company in 2013-14 because the share price just went bananas. Share price went from about 30 cents up to $1.56. So it's a 5-fold increase in share price in about 1 year. So that's when I would have done the research. But ever since then, at the top of that little hype period, share price has done absolutely nothing, just gone sideways. And I don't know much about what this company does. Let's have a look. Engages in the provision of debt solutions and direct lending services to individuals. Markup of this company, 122 million. Dividend yield 7%. Price earnings ratio 8. So maybe cheap, but I don't think there would be any growth. In fact, if you look at the revenue growth over the last 5 years, it's actually been dropping. So that's one of the reasons I probably haven't done any more or any further research on this company. And you can tell that by the chart. Share price doing nothing over the last, we'll say, over the last 9 years. 9 years. Share price done absolutely nothing. Now, there's another announcement. I'll just get rid of some of these tabs I don't need. Another announcement that I just saw before I went away and do something else, because Bubs Australia released a trading update at 9:56 a.m. So if you don't know, I usually go away at about 10 a.m. to do other stuff, and I did not have a look at this trading update. So let's have a look at it together and see if anything's exciting in here. I doubt there's any trading update. Cash position 29.2 million. China highlights. China net revenue down 57%. China net revenue down 52%. It's not a good start. United States revenue of 4.6 million. Eek. Year to date, 17.6 million. Forecast revenue to be 20 to 22 million, up from 8.1 million last year. And in Australia, Australian retail high growth momentum continues to be the fastest growing infant formula manufacturer within the top 6 major manufacturers. 27% growth in scanned sales value. Okay, I'm not getting much information. Oh, there it is. Straight highlights. Q3 net revenue of 4.3 million, up 41%. Year to date, up 27%. And they expect revenue in Australia to be between 14.5 and 14.9 million versus 12.9 million last year. So not much growth in Australia, small growth. The only growth this company's seen has been in the United States. So let's have a look to see how the market liked this particular trading update. Let's have a look. I'm going to guess it's going to be down a little bit, say 2% or 2.7%. And let's have a look at the daily chart. So when a share price is down 2.7%, it's the market, they either liked it or hated it, because the share price has been a downtrend for a while now, since about August, September of last year. And because I couldn't get a read on it, I thought maybe the market probably hasn't got a read on this, whether this announcement is good or bad. And let's have a look at the announcements released after 10 a.m. Now, I already knew there was an Orcoda announcement, contract for acquisition of Future Fleet International, share price down 1.8, so market didn't care about that. Ventia, is it Ventia or Ventia? Ventia Services secures 6-year contract with Transurban of Queensland. This is a company I want to do research on, and the main reason I think it could be a nice, stable company to own for the long term. Share price really doing nothing. But when you look at the company, its market cap of 2.3 billion, dividend yield 7.8, and I think this company can grow slowly. So that dividend yield, based off the initial capital, might grow with time. Price earnings ratio 12.2. This company is an infrastructure services provider, so they fix power lines or power poles, that sort of thing. Maybe I'm mistaken on that, but that's what I think they do. So a possible interesting defensive play, a company I think can grow gradually or quite slowly over the next 10 years. But I think based off where the share price is right now and the valuation of the company is right now, a possible buy for those who are more risk averse. That's probably the best way to put it. Maybe I will take a position in this company. I just don't know just yet. So that's Ventia. Another company I'm interested in is Metro Mining, Drawdown Nant. That's not interesting at all. Paladin, Namibian government response to media commentary, share price up 10.7. That must have been positive. Frontier Digital Ventures, earn out update, share price down 4%. Ooh, I'm interested in this company, but why have I not taken a position in this company? And there is one simple reason, even though I'm interested in this company, I think it could be some good value. Share price has decreased from $1.87 in October, November 2021 to a current share price of 37 cents. And look at that chart. That is a well-defined downtrend. When you see a well-defined downtrend for a company that is not high quality, and Frontier Digital Ventures is low quality because it's not profitable, not generating cash flow just yet. And the market hates these sort of companies. That's why the share price is down where it is now. If the sentiment in these type of companies shifts, then the share price of this company might go on a run. But we don't know when that shift will happen, if it happens at all. More than likely, it will eventually happen in the next year or two, but we don't know when it's going to happen. So up until then, I will just keep Frontier Digital Ventures on my watch list. Mineral Resources completes acquisition. That's boring. Webcentral response to ASX price query, up 25%. Ooh, it's been disastrous. That was a sort of a merger between two companies. Was it 5G Networks, and the old Melbourne IT merged. The share price has absolutely cratered. So nice little bounce in the share price. Well, that's more than a bounce. It's a 3-day run, the share price. Share price has gone from, say, about 6.5 cents up to 12.5 cents in 3 days. But look at that 1-day candlestick. Massive shadow to the top of the candlestick, which tells me there's a lot of selling today. Share price got as high as 17.5 cents and closed at 12.5 cents. Let's have a look at a 5-minute chart. More than likely, the high was towards the start of the day. Yep. In fact, if we look at the 1-minute chart, oh, look at that. Massive buying in the first few minutes, say 10 minutes. Share price went from about 10 cents up to 7.5 cents. This is just day traders. That's all it is. And their whole reason they got an ASX price query is because the company hasn't released any price or market sensitive announcements. And the ASX just wants to know, have you released all your sensitive information to the market? And if you haven't, why is the share price going bananas? Maybe that's why the share price is going bananas, because it's insiders trading on that information you haven't released to the market. And more than likely, Webcentral said, no, we don't know why it's happening. So no, that is exactly what they said. Webcentral is not aware of any information concerning that has not been announced, which, if known by some in the market, could explain the reason trading in its securities. And if they say no, is there any other reason what could explain this sudden interest in this company? And they said they're not aware of any other reason for the recent trading in its securities. So that's very boring reply from Webcentral. And more than likely, a lot of selling came in because of that reply. Let's have a look. So 146 came in there. Well, not a lot of selling. The selling will happen before that. So this more than likely is just day traders getting a little bit excited. They saw a run of the share price using some filters or screeners, and they got on board. And there's a reason why the majority of day traders fail what they do, because they just fall into traps, FOMO traps and fear traps, greed traps, that sort of thing. Anyway, that's it for today. The last announcement so far, Toys R Us, ANZ Limited. Market cap of that company is $9.5 million. Now let's have a look at the top gainers for today. See if I've missed anything. Always have a look at this. So Aurora Labs, Betmakers, they had some sort of what did they do? Sort of a structural thingy, strategic operational restructure a few days ago, the 31st of May. So the market seems to have liked that. So let's have a look at Betmakers, not the 1 minute chart, the daily chart. Yes, see, even though the share price is up a lot, the share price is not in an uptrend. You can see the share price is still in this red zone, which I call resistance. So every single time the share price of Betmakers gets into this red zone, we see a lot of supply come onto the market and we see share price go down. So I call that red zone sort of a resistance level, resistance zone. A lot of supply will come in that zone, and we've seen that time and time again for Betmakers. So even though there's been a good reaction from the market the last few days, the share price is still in that zone or has entered that zone. So this is not a breakout for Betmakers at all. So I'm ignoring that. Webcentral, I've already talked about them. Tiny Beans, talked about them. And to be fair with you, nothing. Vitura Health, I think this company could be really undervalued. It's a sort of a medical and recreational cannabis company, is profitable. So this company, market cap of 192 million, dividend yield, yet this company provides a dividend to the shareholders. Dividend yield 2.9%, price to earnings ratio 19.2%. Look at the revenue growth has been phenomenal with this company, from 21.7 million to 66.9 million, and profit of $6 million in the last financial year. And the share price has been going down. I'm not sure why, but again, just listen to the market. There's some reason why the share price is going down. And even though the share price is up 15.9% today, it's still a couple of things. It's still in that red zone, which is resistance, and it has to get above the recent highs we saw back in April. If it gets above that, we could start seeing a little bit more interest in particular trading for this company. So that's Vitura, a company that I actually do like a fair bit. Appen, up again, 14.8%. Again, AI. They've been mentioning AI in their presentations, their announcements, and the only reason we've seen a lot of interest in Appen over the last, say, 2 weeks is because of AI. And this could be a breakout in Appen. Really good volume the last 5 trading days. Share price at, we'll say, a 6-7 month high. Last time share price was this high was in September last year, which was, when was that? That's 9, we're 5, so 8 months ago. And there is a little bit of a resistance level there, not much. But the reason why any resistance level is not working for this company is because there's a lot of demand for shares in Appen. So even if there was supply because of resistance, there's enough demand to overcome that supply. And that's why Appen share price has been rising violently over the last 5 days, is because of that increased demand, because of their association with AI. Whether their association, their relationship with AI is going to work, no one knows. Maybe they're just using or saying AI because they know how interested market is in AI right now. But keep an eye on Appen, because if they are successful with their ventures into AI, this could be a fairly cheap company. Market cap 459 million. And I do feel sorry for those who sold out when they did the capital raising. Share price got to a low of that day of $1.90. The share price has doubled since then. That day was the 17th of May. So we're talking about just over 2 weeks ago. The share price has doubled in Appen. Again, share price has doubled in Appen. Insane. And anything else interesting here? Deep Yellow up 12.6%. Deep Yellow is a Namibian uranium explorer. I doubt their producer. To Paladin up. Yep, we know that one. Oh, that's about it. Red Bubble up 11.3%. Let's have a look at the worst performing stocks of the day or companies. Stocks, top losers. And the second worst performing company is Zelira Therapeutics. I mentioned Zelira in my previous daily update because the share price rose, was it 220%? I think I did mention that I would want to see the share price go sideways. I wouldn't want to see a lot of selling, and we have seen massive selling the last 2 days. Not massive, but the share price has just created. Share price has gone from $3.20 down to $1.78. So there's just consistent selling and no demand. Not only that, I would have no doubt that when someone wants to sell their shares in this company, they just dump on market, and the share price could drop 4 or 5% on just the one trade. Because I did have a look at the liquidity, and there's not a lot of liquidity, to be honest with you. So that means there can be the share price movements in this company can be quite volatile. So no doubt a lot of day traders have been burnt and are being burnt right now. And those selling are more than likely those day traders that have been burnt. So down to $1.78 from a high of, was it high on the other day? High of $3.35. So share price has not quite halved, but almost halved from its highs just 2 days ago. So the second biggest loser today was Zelira Therapeutics. First biggest loser today was Mindax. I've never heard this company before, even though they have a market cap of 135 million. More than likely, it's the resource, like commodity mining exploring company. Large, let's have a look what they do. Mining exploration company. Does it say what they're mining? Iron ore. Did they release an announcement today? Not to proceed to third earning condition. I don't know what that means, but the market didn't like it. That was yesterday, 2:58 p.m. Let's have a quick look at Mindex. What was it? MNX? Probably got that completely wrong. MDX. MDX. So more than likely, share price dropped a lot yesterday. Well, the market was confused yesterday. So the share price, according to this, was up 9.2%. The high of the day was 12.5 cents. So I don't know what the market saw in that announcement. And their share price dropped 30.5% today. Not a lot of volume either, so too volatile for my liking. So MicroX down 20%. Company I actually have done a video or two on MicroX because their technology does look interesting, but it's just taken them a long time to monetize their technology is probably the best way to put it. Adairs down 14.8. Wouldn't be surprised to see a lot of retail companies down today. So let's have a look at some of the retail companies down. Levisa down 3%. Some of these companies are actually up. Shaver Shop down, up 2%. Michael Hill Jewelers did release sort of a negative. It wasn't that negative. And some of these companies are actually up. Universal Stores up 7.8% today. It's just a bounce. So it's interesting to see how some of these companies' share price are bouncing now. And that could be a sign the market is thinking, well, we know conditions are bad for retail companies, particularly discretionary retail companies right now, but the market is punishing these companies a little bit too much. And I see some value in these companies. That's probably why you've seen a bounce in Universal Stores. But you never know, and the market could be wrong. Maybe there's further downside to come from here. Maybe there's further profit downgrades to come. And if there are further downgrades to come, I think that could be negative for not only these companies, but for us all. Anyway, I think that's going to be it for today. Didn't show all companies here. If you have any questions about any companies I've mentioned in this video, or any questions about what I'm doing, I'd love to hear from you. So leave your thoughts, your questions in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.